Hello everyone and welcome to another Elliott Wave forecast technical video a day. Today is Tuesday, 20th of November, around 10 p.m. Eastern Time. Guys, unbelievable slow market today. Bad. Like, slow it is. I mean, nothing changed in the market according to what we did today. And we're gonna do a simple video, 5-10 minute videos explaining to you guys and showing to you guys the position at this day. The position at this day, you guys know which one it is. It is either it's gonna make a new low or it's gonna make a double zigzag. Right now, we don't know yet which one is gonna do, but but what we recommend is that we kind of see some sort or another swing lower in the dollar minimum. In other words, more US dollar weakness before any strain if it's gonna happen. So the dollar, let's see what it comes out at. Is either one of the two scenarios that we're showing, either this one or this one, but we need more data. With the data that we have right now, we don't have enough to be able to say which one of the two is gonna take place. Also, we want to mention the idea that the dollar CAD, it changed the trend in favor against the dollar. So guys, be careful with the risk of trade, very careful with the risk of trade. We can be here in the presence of a switch of the trend and like I say, with the right stop, nothing wrong to take a long risk position. All right, so the dollar, this is the 4 hour, either one of these two scenarios. Now in the 1 hour, if you notice, from here up to here, at least Elliott Wave aging, we should be trading lower in the dollar. So nothing wrong with if the dollar recover a little bit around 81.20, 81.10, selling the dollar there doesn't look like a bad trade. Now at least you're gonna get, in my opinion, another leg lower. Now the reason why I feel comfortable doing that is because of this. Look, this is the S&P 500, 5 weeks out of that low right there, 5 weeks out of that low. Even if it makes another marginal new high, that's gonna be also a 5 weeks. So so that move right there in the S&P, it makes me confident that another leg higher in risk to at least 1400 should take place, and that makes me confident also to make the case for another move lower in the US dollar. If we overlay the US dollar, let me see if I have it here. If we overlay these three pairs, this is the 60 minute, and we put the dollar and we put the euro and we put all those three together with the S&P, there can be a very unique scenario here. Let me explain to you what am I thinking to see if you guys can get it. Look, the dollar bought on the same day as the S&P right here, but the euro did before. So maybe if the low is in risk, the euro is kind of nesting to the outside, and there's gonna be a strong move sometimes during the rest of the week in favor of risk. Who knows? That seeing all I know is that seeing the 5 weeks out in this swing in the S&P makes me confident to say that the dollar should stay here and that maybe the euro is doing some sort of 1-2-1-2 or ABC. Remember, do not need to be at imports. So like I say, I know, I mean, most of the 1 hour most of the 1 hour pairs have become bullish risk, and like I say, you gotta be careful, guys, very careful with the risk of trade at this stage. The S&P right there is showing 5 weeks. That's what I feel comfortable selling the dollar. If you look at the Dow Jones, let me see when I have the Dow Jones right here. Look, another 5 weeks. So like I say, I mean, I tend to believe that another extension in favor of the risk on trade should happen. Let's see what happens after that extension. And honestly, very careful, guys, very careful. I mean, very careful, because this is how the turn in the market happen. Everybody's better now. Everyone is thinking crash, and there goes the market, boom, 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 and it takes your money. At least we know that we are in the right side of the market. At least we know that we aren't gonna get trapped in any type or sort of trap. All right. So if you can hold and buy risk around this area, I mean, we recommend that buying risk at least for a continuation to the upside. Finally, I want to mention the idea about oil. Oil, it did 3 weeks off the low, but well, oil is corrected. That doesn't mean they're holding the low, and also we believe that oil is gonna trade higher. So very careful. Now, if we, with the short side, I mean, if we put the cat here in top of oil, the cat in our 1 hour cat, it becomes bearish, and at least to another swing lower. So, I mean, I don't know, guys. I just did 51 charge, and I tell you the truth, I just did 51 charge, and I see continuation in risk in the market. Let's see if we are not wrong, but we see outside in the market we can maybe get some sort of risk off, because if the S&P is showing, or the down here is showing 5 way, we should see a pullback in risk, and consequently after that we're gonna be able to see, like I say, after that we're gonna be able to see another rally. So some sort of pullback in risk can happen sometimes tonight, but then we can have a powerful move to the upside and risk after. So listen, if you can buy the Dow Jones around towards 2,600 against the low, that should not be a bad idea. All right, the same with the whole risk instrument. The yen pairs, they should be ending a cycle sometime soon, and that's why, taking in consideration, like we always do, if we put the euro here and the euro yen, and take into consideration that this cycle should be ending soon, I won't be surprised for the euro to do this and retest the lows before a powerful move. I mean, because remember, all these things comes together, and I won't be surprised the dollar needed to retest the highs before lower. So be careful. But the indices, I tend to believe that after the pullback that we're gonna get in risk, sometimes maybe today or tomorrow, we should see a pullback in risk. After that, we can see another round of risk on trade. Okay, thank you all, and I'll see you guys tomorrow.